Stuff in there. But let's get to our main segment for today. How does non-farm payrolls affect markets, Errol? We have another non-farm due tomorrow. I want to talk about what non-farm is and how you all can kind of gauge it, what you can see, what you can expect from tomorrow morning's number. And then also I'd love for anyone out there to, reach out to me on Twitter at Frank_Caberna or at the Small Exchange YouTube channel and give their take on what they think non-farm payrolls does to markets. Do you think it affects them? Not at all. Do you think it has a big effect to the stock market and interest rate market and US dollar? What do you think is the most important asset class that non-farm payrolls affects there? Or just comment like, hey, man, I don't even know what this thing really is. Can I get some more info? Although I think that we'll cover it here today. Errol, what's your experience with non-farm payrolls or the unemployment rate number that comes out monthly here in the US?
I've never analyzed that for myself and I've never analyzed that or even sought to see if I was going to have a reaction in any of my positions with it.
Awesome. Then let's go deep on it, man. Yeah. Today's going to be a fun one. I want to give people the actual, just like bare bones of what this thing is technically. And then we're going to talk about what it means for the market, in a more applicable way. Because technically the US Bureau of Labor Statistics comes out with a non-farm payrolls number on the first Friday of the month. I believe it's like 7 or 7:30 a.m. Central Time here. Or wait, there we go. 8:30 a.m. Eastern. Nailed it. And so you've got the timing of it. It happens that first Friday of the month. And you can see here the most recent number was 428,000. Wahoo. What do I do with that number, Errol? You have to put it into context because, like, if I told you, all right, Errol, it is May 6th at 7:30 a.m. Central or 8:30 Eastern, you actually are by Eastern time because you're down in Florida, and the total non-farm payroll increased by 428,000. What's going to happen to the market, Errol?
What does that mean to me? Do I get long? Do I get short? Do I volatility trade? What do I got?
So the number technically means that non-farm payrolls, which is employees, new employees here in the US, not working on farms, which seems kind of weird. But when this was invented, farms they're still extremely relevant, but more relevant in everyday life. We added 428,000 non-farm jobs in the month of April. Now, whether or not you buy or sell the stock market is going to depend on context. Is 428,000 a big number? Is it a small number? This is like a classic game that I play a lot with, friends and stuff. I was recently in Hawaii and we're on the Big Island, and it's like, how many people live here? Like, it could be, 10,000, it could be 500,000. And instead of trying to guess that number, like, is 428,000 a lot of jobs or not a lot of jobs, you can put it into context of what bank analysts and a bunch of analysts around the market are expecting. And this number, this expected number it can easily be found on any calendar, or if you just Google, non-farm payrolls expected number. Go ahead.
I was going to ask, how is the expected derived?
So a bunch of nerds, or like you like to say, Harry Potter lovers with glasses, they crunch a bunch of numbers. They work at, different banks.
You're like, Errol, what I just said.
What's that?
You're like, Errol, what I just said, what I just explained to you is how they get the expected.
Yeah, like we could go deep on it and be like, well, they look at by market sector, how many jobs, they just like project how many jobs they think have been added given what they've seen in different parts of the economy. And so how non-farm really affects like the stock market or the interest rate market is how this number comes out relative to the expected number. And so it comes out, broadly speaking, in one of two ways. Did it beat expectations? If it beat expectations, then you would expect the stock market to move higher. That's a good sentiment indicator, but also interest rates to move higher because you would think, okay, more jobs. The FOMC, the Fed, is more comfortable, and they're going to move interest rates higher here. And so it'd be optimistic if they miss those expectations. If, they expect for this month 325K, Errol, and it comes out and it's like, oh, we only added 50K. You might see the stock market and interest rate market slide. So it's really a beat or miss expectations when it comes to non-farm affecting markets. Does that make sense?
I'm with you. I'm following 100%. Another question that follows after you explaining that is, if it beats expectations by a certain margin, will it have a different reaction?
So I'm glad that you're going here, because now this is what Frank's just explained is like the super broad notes. Like this is what you would expect to read like in a textbook, which is like, if they beat expectations, everything's great. If they miss expectations, everything's bad. But there's a lot of nuance here. And this is what we'll close with and leave up to everybody out there. Because if I had answers for all of the nuance, then I wouldn't be here. I'd be a very wealthy trader. But so say they beat expectations, Errol, by a lot, and they're expecting tomorrow 325K, and they come out and they're like, not only did we drop 325 on you, we put 900 on you. Then you would see probably an instant reaction of the stock market and interest rate market skyrocketing. Like, holy smokes, the algos are driving up prices for everything because everything's good. But if things are too good, then the backlash is always, oh, well, now the Fed really needs to hike interest rates. And hiking interest rates, as we've seen recently, not always a good thing for the stock market. And so what you'll see sometimes is like, if they come out with exactly 325,000 jobs in tomorrow's non-farm, then the markets will wiggle around, but they probably won't move that much. But if you see a big beat or a big miss, you'll see probably an initial reaction like we're talking about here, up for a beat or down for a miss. But if the miss is so bad that the Fed is actually going to not be able to hike interest rates so much as they've been saying recently, that stock market might actually bounce back and be green on the day. And so there's some nuance here, but at least you have the broad strokes of how non-farm payrolls affects markets. Again, feel free to reach out to me at Frank_Caberna on Twitter, or comment on the Small Exchange YouTube for more information, or give your take on how you think non-farm payrolls affect markets. Errol, what do you think about today's segment? Are you excited for tomorrow morning's big number?
Yeah, I think it's going to get me in this perpetual thing where every month I'm going to be trying to guess how close I can hit the mark when they release the data, to kind of play a game with myself now. So
yeah, that's always fun. And then also, obviously, the practical thing in the market is like, you see that big run up in stocks or interest rates, look at trading either the other side of it or trying to run with it. Or especially, I just like to see, like, if the small stocks, what we were looking at here today, the SM75 futures move about $1 on a given day, and non-farm comes out and they're up or down $2 or $3. I'm getting on the other side of that, thinking that by Friday afternoon, that market might come back into line. So a lot of great stuff here, Errol, as always. Thanks so much for joining me. Some great questions. Make sure you're checking out today's assignment on the Tasty Trade Network with Errol, and you're checking him out on Twitter and TikTok and everywhere else. Thank you, my friend. And thank you, everybody, for watching Small Stakes. We'll be back tomorrow afternoon with some more content after that non-farm payrolls. Make sure you're trading it and having fun in Friday morning non-farm mode. Next mode is Splash into Futures. Stick around for that with Pete Molman. It's going to be a fun one. Thanks, everybody, for watching. Peace.